Hi all, we are starting with the revision for the test series. So this test series is for May 25 students and we are looking into the revision of That's It book, That's It on GST and Customs. And in this That's It book, you can see various chapters, almost all the chapters are covered. And this revision is even useful for CMA final students as well. I gave the CA, ICI chapter reference as well as ICMA module reference also. And here I gave the index of amendments. So all the amendments which are applicable for your May 25 exam is given here as an index, which you need to revise definitely one day before the exam, because mostly for every May exam the questions will be based on amendments only. And thereafter I have given few November 25 amendments also for reference purpose. And this is the ABC analysis for May 25 or November 25 exam based on past exam questions, but not necessary that this ABC analysis needs to be like followed by ICI. As we all know about ICI, they need not follow about this ABC, but just as a reference point I have just given ABC analysis. Maybe for all other subjects ABC will work out, but not for DT IDT. DT IDT particularly don't believe in people if they are telling. So you just tick on to ABC analysis, so you know which chapters are important, which are not. No, not at all, because they search questions from different provisions and they coin the questions. So as they coin the questions, this will be interconnecting provisions. So due to that reason, you cannot just like that say, so I will follow only A, I will give more importance, B lesser importance and C very less importance, not of that sort. You have to give equal importance only. And here A category topics are mostly like this practical areas: levy and collection of IGST, place of supply, value of supply, input tax credit, exemptions, then search seizure offence and penalties, because actually it was category B, but for from last 2 attempts onwards they are asking more questions on that. Then types of customs duties, valuation under customs, exemptions and even baggage, because every attempt more or less one question they are asking on baggage. So these are the 10 topics which are A category topics, and definitely from this you can expect close to 50 to 60 marks from this itself. But the problem is this alone will not be sufficient. The knowledge of this B and C will be sufficient because that will be connected in these questions, okay. But importance wise, so these are the first 10 topics which you need to give importance, but other topics knowledge is required. For example, when you are doing a question on input tax credit, there will be one particular transaction related to supply you need to connect. Or when you do the question on value of supply, so supply will be connected. For example, so transaction between employer and employee and related party transaction, we will take value as per rule 28. But the problem is that first, is it a supply or not, we need to check as per supply chapter. So like that, these are the points which are even necessary. And how registration will be relevant. So we are writing that a service is taxable and it will come under FCM, but the person is not required to register. But whether they are required to register or not, you need to know from registration. As a person is not required to get registered, so which means that they are not required to pay GST. So the answer will change. So that's where these informations also will be useful. And if not also for IDT exam, definitely for IBS exam, this will be very much useful. So therefore you need to learn everything, and this revision is not a replacement for lectures. So you should not think that okay, revision alone I can follow and you can go for exam. No, definitely this revision is for those who learned the subject. For them this revision will be helpful. And we are starting with the first chapter, segment 1, basic concepts of GST. In this basic concepts of GST, we are covering how GST is formed, dual GST model, GST council, types of GST, GST network and constitutional provisions. These are the areas in this. So let's start with how GST formed. As we all know, all indirect taxes levied by central government except customs duty got subsumed into GST. That is, excise duty, service tax and central sales tax got subsumed into GST. Customs duty is outside the ambit of GST, not subsumed into GST. However, we have some additional customs duties, that is CVD and SAD. That CVD and SAD, CVD is to counterbalance excise duty called as countervailing duty. SAD is to counterbalance sales tax called as special additional duty. So these two also got subsumed into GST because the excise duty and sales tax got subsumed into GST for that reason. So CVD to counterbalance excise duty and special additional duty to counterbalance sales tax is also subsumed into GST. And specified indirect taxes levied by state government in the past, only 6 indirect taxes, that is value added tax, advertisement tax, luxury tax, entertainment tax, lottery and betting tax, then purchase tax also known as octroi. So these 6 only got subsumed into GST. Other indirect taxes levied by state government like professional tax, local body tax, etc. and all not got subsumed into GST. But entertainment tax and other indirect taxes levied by local authorities, nothing. So none of the local authority levies got subsumed into GST. At least in state government, these 6 got subsumed and remaining not got subsumed. But in local authority, not even one got subsumed into GST. So therefore, right now there is entertainment tax which is levied by local authority, that is still outside the ambit of GST, that is there. But entertainment tax levied by state government got subsumed into GST. Then the next aspect is dual GST model. Dual GST model refers to levy of GST parallelly or simultaneously by both central government and state government, that is known as dual GST model. And India has adopted dual GST model through Constitution 101st Amendment Act. So which is the year 2016, it is not 2017, it is 2016, and we adopted this model from Brazil and Canada. So what does dual GST model means? On the common tax base, that is value, both central government and state government levy GST. Then GST Council, the decision making body, as GST is a dual GST levy, which means both central government and state government levies, so there should be a common decision making body. That common decision making body is called as GST Council as per Article 279A of the Constitution. So GST Council derives the powers, roles, responsibilities, everything. Article 279A of the Constitution, GST Council is constituted by President of India. And who will be the chairman of GST Council? Union Finance Minister is its chairman, and it is a decision making body of GST. So basically they take the decisions and they give recommendations for implementation of GST. Based on the recommendations of GST Council, central government and state government issue notifications, and those notifications will be coming into effect. And GST Council has total 33 members and the quorum is 50%. So which means 18 members should be there, 17.5, that is 18 members minimum should be there in order to call a meeting as a valid meeting. And central government vote will be having 1/3 weight and state government vote will be having 2/3 weight. And to take any decision, there should be a weighted majority of the people who are present in the meeting, which is weighted majority, 3/4 weighted majority is required, that is like a special resolution majority. So 75%, more than 75%. And who are the members? Who are these 33 members? State finance ministers and MP of state affairs in charge of the revenue or its members. So we have one union finance minister, and for 31 states we have 31 state finance ministers, and we have MP of state affairs in charge of revenue, so 33 members. Then types of GST, we have CGST, that is Central Goods and Services Tax, which is levied on intra-state supply by central government. SGST is on intra-state only but levied by state government. UTGST is also intra-state, that is within the union territory, but it is levied by central government, whereas IGST is in case of interstate supply levied by central government. And GST compensation says it is not on all goods, only on notified goods, not on services. On services we don't have GST compensation, says only on goods by central government. What is the objective? To compensate the states on account of loss suffered by states due to implementation of GST, and it shall be levied up to 31st March 2026. And basically IGST is levied by central government. So whenever the supply is intra-state supply, we have either CGST plus SGST or CGST plus UTGST. But whenever it is an interstate supply, the type of GST will be IGST. IGST will be levied by central government, and 50% of that IGST will go to the consuming state based on place of supply. If place of supply cannot be ascertained, then in that case it shall be apportioned between the states based on the turnover of the supplier. So when place of supply cannot be ascertained, if the place of supply is a foreign territory or other territory, in that case a place of supply cannot be determined. So in that case what will happen, even though it is interstate supply, so that will be distributed between all the states of that particular supplier. So that supplier would have made sales to Tamil Nadu, Karnataka, Kerala in that ratio, of the previous year turnover we need to take and we need to distribute this. So it shall be apportioned between the states based on the turnover of the supplier during the financial year. If the turnover is not available, then it will be distributed to all states and union territories based on their revenue for the previous year. So this is given in section 17 of IGST Act. So which means IGST fully will not be retained by central government. Then supply of goods or services is the taxable event under GST. So this supply is divided into two: intrastate supply and interstate supply. Intrastate supply means location of supplier and place of supply in the same state or same union territory, whereas interstate supply means location of supplier and place of supply in two different states or two different union territories, a state and a union territory. And basically supply is the taxable event. Suppose if the activity is not a supply, the levy of GST shall not arise. And we should know that we have union territories wherein Jammu and Kashmir is now not a state. It will be considered as two union territories, that is Union Territory of Jammu and Kashmir, which is like a state treated as state legislature, so therefore it is SGST Act, whereas Union Territory of Ladakh, which is without state legislature, so it is like a union territory, and that should be UT-GST Act. So state of Jammu and Kashmir is divided into two union territories: Union Territory of Ladakh which state without state legislature and UT-GST Act is applicable, and Union Territory of Jammu and Kashmir, Union Territory with state legislature where SGST Act is applicable. And previously we have Dadra, Nagar Haveli, Daman, Diu as two separate union territories. Now they have merged it into a single union territory. Then next, GST network. So basically for the purpose of smooth implementation of GST and for matching of credits between the supplier GSTR1 and the recipient GSTR2B, and also for the purpose of processing the tax payments, etc. So they have developed one particular GST portal. So this GST portal is maintained by GST network. So GST network provides information technology infrastructure for the implementation of GST. It is referred to as common portal, and they act as a liaison between central government, state government, taxpayers, banks and other stakeholders. So they will connect all these people. And what are the functions of GST network? It facilitates registration. So the first activity will be registration. First we will do registration. Thereafter we will make the payment of taxes, and thereafter we will file the returns. So registration, payment of tax, furnishing of returns. Then IGST, whatever is collected by the central government like this, it will be settled between the states. So that settlement also will be done by GST network. And even we can generate the e-way bill, e-invoice, etc. and all through GST network. Then if you see the constitutional provisions, we have three articles. Article 265 says that tax shall be levied and collected only by authority of law. So if there is no power to collect the tax, definitely they will not be able to collect the tax. That is given in Article 265. Article 245 says that power for enacting laws is conferred on the Parliament and state legislature. That's where in some cases, so central government will have power, some cases state government will have power. And Article 265 also says it governs the subject matter of laws made by the Parliament and state legislature. That's where accordingly 7th schedule to the constitution, there are three lists: union list, state list and concurrent list. Union list means fully it is levied by central government, that is law, power to make law is with central government. State list means power to make law is with the state government. Concurrent list means power to make law is with both central government and state government. And there were few entries before with union list and state list separately. Now GST is a common list which is covered under both union list as well as state list. That's where constitution amendment was required. And what are the goods which are outside the ambit of GST? Alcoholic liquor for human consumption and petroleum products. Alcoholic liquor for human consumption, we have extra now: denatured, extra neutral alcohol, rectified spirit used in manufacture of alcohol, but that is not applicable for May 25 exam, for November 25 exam. Then petroleum products, all same: crude oil, petrol, diesel and aviation turbine fuel, natural gas. But remember, diesel is not normal diesel, high speed diesel only is excluded. Suppose if it is a normal diesel, is it covered under the ambit of GST? Yes, normal diesel is covered under the ambit of GST. Engine oil is covered under the ambit of GST. Kerosene oil is covered under the ambit of GST. Even LPG is also covered under the ambit of GST, but CNG is natural gas, that is not covered under the ambit of GST. And what about tobacco? Tobacco is definitely covered under the ambit of GST, but extra part what we have is that even we have central excise duty as well as GST with respect to tobacco. So these are the key points related to introduction or basic concepts. Mostly on this basic concept we can expect MCQs. And we are moving on to segment 2. Segment 2 is supply under GST. Supply under GST, even though we will not get a standalone questions on this, but definitely supply under GST is required to be applied in many transactions. And check, we need to first determine whether an activity is supply or not. If the activity is not a supply, then we don't have to pay GST. So if the activity becomes supply, then only we need to check whether it will be taxable or exempted and who will be liable to pay GST. So therefore, the first aspect in every transaction that we need to commonly see is that is the activity supply or not a supply. So here in this segment we are going to cover inclusions, exclusions, then some important definitions of goods, services consideration is there, then classification of supply into goods or services, then composite supply and mixed supply section 8. So supply is defined under CGST Act section 7 and composite supply, mixed supply is given under section 8 of CGST Act, and we have some important circulars. That summary we are going to see. So first we will start with supply section 7. 7 is the taxable event, so which means if the activity is not a supply, we don't have any levy. So levy of GST is a taxable event, supply of goods or service or both, and supply is divided into total 4 parts. 7 subsection 1 inclusion, 7 subsection 2 read with schedule 3 is exclusions, and 7 subsection 1a is classification of supply into goods or services read with schedule 2. And 7 subsection 3, central government on the recommendations of the council can classify supply of goods into supply of services and vice versa. And right now 7 subsection 3 we don't have anything notified in this regard. So practically what we have is 7.1, 7.1a and 7 subsection 2. Supply includes 7 subsection 1. Under 7 subsection 1 we have 4 clauses, 7.1a, b, a and c. 7.1a talks about any activity, that any activity should be for consideration in the course or furtherance of business. Then 7.1a also any activity or transaction, but that should be between a person other than individual and its members, and it should be for a consideration. Then 7.1b is import of services for a consideration, and it may or may not be in the course or furtherance of business. This course or furtherance of business should be from the recipient point of view. Then 7.1c read with schedule 1, that is certain activities. So schedule 1 talks about list of activities which are treated as supply even though without consideration. Schedule 2 talks about classification of supply into goods or services. Schedule 3 talks about exclusion from the meaning of supply. So 7.1c read with schedule 1, total 4 activities are there. DRIP, D for disposal of business asset. I purchase a business asset on which I have availed the ITC, and that business asset is either disposed of or permanently transferred. Then R for related party transaction, transaction between related parties or transaction between distinct persons. And then I for import of services from either related person or from an establishment located outside India, and that need not be for consideration, but it should be in the course or furtherance of business. And P for principal agent transactions, any transaction of goods between the principal and agent, but importantly the agent should be acting on behalf of principal. And then we have some important definitions here. Goods is defined under 2 clause 52, services 2 clause 102, business 2 clause 17, consideration 2 clause 31, and person 2 clause 84. First we need to check 7 subsection 2. If an activity is in 7 subsection 2, it is not a supply. If the activity is not in 7 subsection 2, then we need to check 7 subsection 1. As per 7 subsection 1, if the activity is covered, then it will be supply. If it is not covered under 7.2 as well as not covered under 7 subsection 1, consequently the activity is not a supply. But whenever the activity is in 7 subsection 2, that is excluded from supply, we need to write it as neither supply of goods nor supply of services. But suppose if the activity is not in 7 subsection 2 and also not in 7 subsection 1, you should write it as not a supply because it is not covered under section 7. And whenever it is covered in 7 subsection 2, there clearly we need to write as per 7 subsection 2 read with schedule 3 of CGST Act, the said activity is neither supply of goods nor supply of services. That is the technical jargon that we need to use. Then summary of 7 subsection 1, 7.1a, activity, any activity, consideration, yes, it should be there, it should be in the course or furtherance of business. And whose point of view we need to see? Supplier point of view, and the coverage is both goods and services. But 7.1aa is any activity between a person other than individual and its members, and it can be either between members and the person or person and the members. So it is like partnership firm to partners or partners to partnership firm, company to shareholders or shareholders to company, or like a board or association to its members and the members to the association. And it should be for a consideration in the course or furtherance of business. Again, it should be from supplier point of view, and the coverage can be goods or services. And 7.1b is import of services for consideration. In this case, it may or may not be in the course or furtherance of business. Always we need to see it from the recipient point of view. So the recipient is importing the services. For example, I said Amazon, Netflix, etc., which is imported by individual for his personal purpose. Even then, it will be treated as import of service supply because there is consideration that is involved. And here it is only services, goods are not covered because import of goods is subject matter under customs, which is the taxable event under customs. So Customs Act 1962 talks about the import of goods levy. Then 7 subsection T, DRIP, in case of disposal of business asset on which ITC is availed, consideration is not essential, and also that disposal may or may not be in the course or furtherance of business. What we need to see is that they have purchased the asset and that asset has been disposed of on which ITC has been availed, but that disposal may be to employees under employee welfare in the course or furtherance of business, or to CSR, it may be in the course or furtherance of business. But what if it is donated to an orphanage or to a old age home? That may not be in the course or furtherance of business, that is irrelevant. What we need to see is disposal of business asset on which ITC is availed. And again, from whose point of view? Supplier point of view. As we are referring only business asset, so the coverage will be only goods. Then R for related party transaction, including transaction between distinct person. Again, it is without consideration, but should it be in the course or furtherance of business? Of course, yes. And from whose point of view? Supplier point of view, coverage is both goods and services. Then I for import of services from a related person or other establishment located outside India and without consideration, but it should be in the course or furtherance of business. Again, recipient point of view, services is only covered. So this recipient point of view we see only in 2 places, that is both import of services. And P for principal agent transaction without consideration in the course or furtherance of business from supplier point of view, but the coverage is only goods. If there is any transaction between principal and agent which is in the context of services, even though without consideration, will it become supply? No, it will not become supply, because without consideration only goods will be coming under supply 71C between principal and agent, not services. Then we have some exclusions from the meaning of supply. So what are the activities which are excluded? So you have to remember with a keyword spelled slow. Yes, for sovereign functions. Sovereign functions means there are some activities of the government, that is municipality or gram panchayat activities under article 243G or 243W of the constitution. Only these sovereign functions are excluded from supply, that is panchayat or municipality under article 243G, 243W of the constitution. They have listed out some list of activities. Those activities, if the government, that is panchayat or municipality does, those activities will be excluded from supply, not exempted, excluded from supply. P for post. What are those posts? Government post, constitutional post and nominated post. Then we have actionable claims. Actionable claims other than specified actionable claims is excluded from supply, but specified actionable claims is covered under supply. So what are those specified actionable claims? HC block, that is horse racing, casinos, betting, lottery, online money gaming and gambling. So online money gaming is only covered under specified actionable claim, not online gaming. Then legal fees collected by court or tribunal, only in the capacity of court or tribunal when they collect the fees, that is only excluded from supply. But if court or tribunal collects any other fees for the purpose of services that they are rendering, like renting of immovable property or giving permission to operate a canteen, etc., and all those are other activities which is not a court or tribunal activity, so that will be covered under supply. And again in that case it will be covered under RCM, where the business entity will pay GST under RCM. So only legal fees, means fees for the purpose of court or tribunal, whatever is collecting, that is only excluded from supply. Then land sale. Sale of land always excluded from supply, whatever the case may be, whereas sale of building is also excluded from supply, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. If part consideration received before and part consideration received after, then also entire consideration is covered under supply, it is not excluded from supply. When is it excluded from supply? Only when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then E for employee to employer in the course of employment, but remember it should be in the course of employment. Then D for death related. What are those activities? Funeral, burial, crematorium, mortuary, including transportation of the deceased. Then deceased here is dead body. Thereafter sale before import. Sale before import, that is sale on high seas. Sale on high seas. Sale on high seas here refers to sale before import, when the goods are in the transit. So one person is transferring the documents of title to the other person, and the other person only will clear the goods from the customs. Due to that reason, the person who transferred the documents of title is not required to pay any GST on whatever amount that they are collecting. And here including government transportation of deceased. So even if government is doing transportation of deceased, that is also excluded from supply. And next we have liquor license granted by state government. So state government will be giving license to sell liquor for which they collect some amount, that is excluded from supply. Then outside the country movement of goods. Supplier is in India, recipient in India, but the goods originate outside India, terminates outside India, from supplier's branch outside India to recipient branch outside India, that is excluded from supply. Then warehoused goods under customs sold. So the imported goods will be deposited in the customs warehouse without payment of customs duty, and thereafter that particular warehoused goods will be transferred to some other person. Means without the importer, original importer will not clear the goods from the customs, but they transfer the documents of title called as warehouse receipt to some other person, like in case of IC sale. So the subsequent buyer is going to clear the goods from the customs. So due to that reason, the original importer is excluded from supply, not required to pay any GST. So these are the list of activities excluded from supply. And for November exam, we have 2 extra activities that is not required. So for May 25 exam, then there is one point here. Gifts by employer to employee not exceeding 50,000 per annum per employee is excluded from supply. If the value of gift exceeds 50,000, entirely it is treated as supply. So remember, gift means it should not be covered under offer document. If it is covered under offer document, that will be called as a perquisite, and that will form part of salary. It will never be chargeable to GST. But it should not be forming part of employment contract or contract agreement or offer letter. Then only it will be called as gift, and the gift exceeds 50,000, then only entire amount will be treated as supply. If it does not exceed 50,000 per annum per employee, then it is not a supply. Then specified actionable claims are these HC block. Then there is a CBIC circular related to 7 subsection 2, that is whenever we are selling the land after development of the land. Sale of land and sale of development land both are excluded from supply. But for the purpose of developing the land, like laying down the pipelines and electricity lines or leveling and roads, etc., for doing this development, they will be collecting some development charges from the buyer. So that development charges is covered under supply, but entire sale of land is excluded from supply. If the development charges is absorbed into the land, then entire amount will be excluded from supply. For example, for sale of land, they are collecting 1,500 rupees per square feet and 500 rupees per square feet for development. Then that 500 rupees per square feet is covered under supply. What if they collect 2,000 rupees per square feet, including for development charges also, then entirely it is excluded from supply. Then perquisites. So gift versus perquisite. Perquisite means it is covered under the offer document by employer to employee in terms of contractual agreement, will not be subject to GST when they are provided in terms of contract. Then some important definitions or points: meaning of goods and meaning of services. So goods defined under section 2 clause 52, goods means any kind of movable property. It includes actionable claims, growing crops or things attached to a forming part of land agreed to be severed before supply or under a contract of supply. Then it excludes money and securities. So here actionable claims will always be treated as goods, and even anything that is attached to earth also will be treated as goods, provided we enter into contract. Under the contract we agree to cut it and deliver at the time of supply. Then services. Services means anything other than goods. Services also excludes money and securities. So money and securities are neither goods nor services, but transaction in money for a separate consideration, either conversion from one form to another form or any other transaction where a separate amount is charged, that separate consideration is treated as supply of services. Same way transaction in securities, that is sale of securities, is not treated as goods or services, but facilitating or arranging transaction in securities like stockbroker services, depository services or any intermediary services, so that will be covered. So security lending, like that one concept is the security lending. It is not transaction in securities, it is facilitating or arranging transaction in securities. Then as money and securities are excluded, so what is the meaning of money? Money can be like, securities is not defined under GST, but securities as per Security Contract Regulation Act, that is shares, debentures, everything will come. And money is Indian currency or foreign currency, or it includes any instrument recognized by RBI. Any instrument recognized by RBI, that can be like check, traveler check, promissory note, all those things will be coming under instrument recognized by RBI, but it does not include currency held for its numismatic value, that is old currency notes, old coins, etc. And sale of old coins and sale of cryptocurrency treat as sale of goods and attract GST, because old coins is excluded from the meaning of money. Meaning of money, it is excluded, means it will become goods. Also cryptocurrency is not recognized by RBI, as it is excluded from money definition, it will be treated as goods and attracts GST. Then actionable claims means any instrument which satisfies 4 conditions, because actionable claims are included in goods. Any instrument which satisfies 4 conditions. Condition number 1, you have right to receive benefit or recover a debt, and that right is transferable from one person to another person. It is legally enforceable, and whomsoever is holding the right, that person is entitled to receive the benefit or recover the debt. So bill of exchange, promissory note, lottery ticket, all these are examples of actionable claims. So therefore it so happens that bill of exchange, promissory note, bearer check may also come under money definition. So what we need to do is that first we need to take the actionable claims. If it is covered under money definition, it will not be treated as goods, whereas if it is not covered under money definition, what is covered under money definition? So bill of exchange, promissory note, bearer check, it is not treated as goods, whereas others will be treated as goods. And when others are treated as goods, only few actionable claims are covered under supply, all others are not a supply, that is the specified actionable claims. Then so their specified actionable claims basically are treated as goods and chargeable to GST at 28%. So specified actionable claims are not treated as services, it will be always goods. But import of specified actionable claims will not be subject to IGST Act. So that is, it will not be subject to Customs Act, but it will be subject to IGST Act. So generally import of goods, Customs Act will be applicable, but import of specified actionable claims, IGST Act is only applicable. So online gaming means offering a game on the internet or electronic network includes online money gaming. Online gaming is not a specified actionable claim. Only online money gaming is specified actionable claim. Only online money gaming is covered under specified actionable claim, but not online gaming. Online gaming is treated as OIDR services. So difference between online gaming and online money gaming is that online gaming I spend money to play the game, whereas online money gaming I deposit some money with the objective of earning or winning the money. So that is online money gaming, and in this online money gaming, when I am playing the game, the objective of earning the money may be by using the game of skill or game of chance or game of both. Everything will come under online money gaming only. Then even though HC block is treated as goods, but import of the same is not covered under Customs Act but chargeable to IGST. Then meaning of consideration. So consideration is defined under section 2 clause 31. Consideration includes either monetary or non-monetary consideration. Monetary payment received or receivable, non-monetary can be in the form of goods or services. It excludes subsidy from central government or state government and excludes refundable security deposits. So subsidy from any other person will be treated as consideration, but subsidy from central government, state government alone is not treated as consideration. Also, if it is non-refundable security deposits, it will be treated as consideration. If it is a refundable security deposit, then it is not treated as consideration. Consideration can be received from recipient or any other person. What we need to see is presence of consideration, that is only relevant, and consideration should be in respect of, in response to, or for the inducement of supply of goods or services. And activity without consideration or consideration without activity is not a supply under 7(1)(a), but activity without consideration may become supply under 7(1)(c) only with respect to 4 activities. Then whether donations is treated as consideration or not. If it is unconditional donation, means I am receiving the donation, I don't have any obligation to do anything in return against the donation. So which means the donation will not be treated as consideration because it is not in respect of, in response to, or inducement of supply of goods or services. So consequently, it is not a supply. Unconditional donation, not treated as consideration, not a supply. But conditional donation means against that money I have an obligation to do something to the person who is giving the money. So therefore it is conditional donation, means it is in response to doing something. So therefore it is consideration and it is treated as supply under 7(1)(a). If donor name is displayed anywhere against in the premises against the donation, and that is not out of compulsion but out of gratitude, even then in that case, if the business name is displayed, that is called as a conditional donation, because display of name gives the business advantage to the donor. So it is treated as conditional donation, deemed to be conditional donation, it will become supply under 7(1)(a), and it is treated as sponsorship services. Whereas if the display of name is not giving any business advantage to the donor, then in that case it is not a conditional donation. So which means that it is unconditional donation, not treated as consideration, consequently it is not a supply. Then, and whenever it is treated as sponsorship services, we all know that sponsorship services, if the recipient is body corporate or firm, it will be covered under RCM. If the recipient is other than body corporate or firm, it will be covered under FCM. Then meaning of person. So person under GST is nothing but person under Income Tax Act plus central government or state government. Person under Income Tax Act means individual, HUF, AOP, BOI, company, body corporate, cooperative society, local authority, or any other artificial juridical person. So that list plus central government, state government will be person under GST. Then there is a taxable person. Taxable person means a person who is liable to get registered or registered will be called as a taxable person. Then next, meaning of business. Business has some general activities and some specific activities. So first, the general meaning of business, it has got so few activities, like total 7 activities are there: trade, commerce, manufacture, then profession, occasion, adventure, or wager. Wager refers to betting activities or similar activity, but its incidental ancillary is also covered, means support functions is also covered under business, and whether or not it is for a particular period of time or for one day, irrespective of the volume or frequency, whether or not for a pecuniary benefit, whether the profit motive is present or not present, that is irrelevant. So this is the general meaning of business. And there are some specific activities which will be treated as business, that is entry tickets. All entry tickets will be treated as business, entry to any premises, and holding an office. So I am holding an office which is accepted by me in the course or furtherance of trade, profession, or occasion, that is also treated as business. Then supply of goods or services in connection with commencement or closure of business. At the time of commencement of business, any supply made, or closure of business, any supply is made, even though sale of assets is not my business, but it is in connection with commencement of business or closure of business, so it will become business. Then provision of facilities or benefits to the members by the association, club or society, but usually it is like for a consideration, that will be treated as business. Example, a resident welfare association providing services to its members by way of incurring the common area expenses and recovering in the form of maintenance charges, that is also business activity, even though they are not doing it for outsiders, they are doing it for their own members. Then any activity of a race club including betting transaction is also treated as business. All activities of race club, betting anyhow covered under wager, but all other activities. Then all activities of government in which government is a public functionary is also treated as business. So every activity of government will be business, but not all activities of government will be covered under supply. So two activities will not be covered under supply. Actually, first activity is municipality or gram panchayat under article 243G or W of the constitution, and liquor license. These two will not be covered under supply, but remaining will be covered under supply. Then meaning of related is not given in section 2, but it is given in explanation to section 15. So total 9 relationships we have. Number 1, such persons or officers or directors of one another's business. So which means that, so in my business you are appointed as officer or director, in your business I am appointed as officer or director, then we both are treated as related. Then they are legally recognized partners of a firm. So partners of a firm, but it should be legally recognized partners. So which means that the partnership firm should be registered. Only partners of a firm are registered, but the firm and partners are, firm and partners are not related, but partners of a firm are related, and it should be a legally recognized firm. Then employer and employee are also treated as related. These are the first 3 points. Next, the fourth point will be, so two companies having a common shareholder, that common shareholder will be holding 25% or more in these two companies. So then those two companies will be treated as related. And next we have one person directly or indirectly controls the another. Control means what? Either investment more than 50% or majority common board of directors, or control by way of operations. And then we have sixth point, that is, so they both are under the common control of a third person. So two companies having a common parent company, then also they will be treated as related. Then point number 7, together they control a third person, that is two shareholders of a company. Any two shareholders of the company, together their investment is more than 50%, together they control a company, then these two shareholders are treated as related. Then they are members of the same family. So family means, so either spouse or children, whether or not dependent, brothers, sisters, parents and grandparents, if they are wholly and mainly dependent on that person. Then sole selling agent or sole concessionaire, by whatever name called, will always be treated as related. Then whether owning a controlling interest in the form of shares by holding company in the subsidiary company. So holding company is holding the shares of the subsidiary company, and whenever they purchase the shares, any transaction between related parties will be treated as supply. However, first we need to check whether the transaction involves any goods or services. Here when holding company purchase the additional shares from the subsidiary company, that transaction is not a related party transaction, because first of all shares are neither goods nor services. Activity of holding of shares of holding company by subsidiary company cannot be treated as supply of service and cannot be taxed under GST, as shares are neither goods nor services. Then what are the goods which are not liable to tax? That is non-taxable supplies. Alcoholic liquor for human consumption, petroleum products, and for November only this extra we have. Then what are the various supplies that we have? Taxable supply, exempted, non-taxable, zero rated. Zero rated supplies are defined under section 16 of IGST Act. Export of goods or services, supply of goods or services to SEZ, but it should be with respect to their authorized operations. Then only it will be called as zero rated supplies. Non-taxable supplies means not chargeable to GST, alcoholic liquor and petroleum products. Exempted supplies means 3, notified as exempted, nil rated and non-taxable. These 3 are only the meaning of exempted supplies for payment of GST, but for availment of ITC we have a separate meaning of exempted supplies. This is only for payment of GST. So goods attracts nil rate or wholly exempt from tax and includes non-taxable supply. The balancing figure is called as taxable supply, means on which we pay GST. So the classification is some simple supply of goods or services which is chargeable to GST or GST payable is taxable supplies, and on which GST not payable is exempted. Not payable, why? Because it is not at all covered under levy. Non-taxable, or it is covered under levy but it is nil rated or notified for non-payment. Notified means if from time to time the notification is given, then it will be treated as exempted. Then meaning of aggregate turnover, all these 4 supplies will come. Taxable supply will come, exempted supply will come, non-taxable supply will come, even zero rated supplies also will come. And whether interstate supplies also should be taken in aggregate turnover, yes, everything should be taken in aggregate turnover. And aggregate turnover should be computed on all India basis for the same person. For example, a person is having business in 4 states, all 4 states business should be taken. How do we know whether these businesses are belonging to the same person? Check the permanent account number. All these businesses are operated under the same permanent account number, then we will be grouping it, and the aggregate turnover on all India basis we need to check. If the aggregate turnover on all India basis exceed the threshold limit, then the person is required to get registered. There are many provisions which are connected to aggregate turnover, and but excludes, aggregate turnover excludes inward supplies which are covered under RCM. Even though I have some inward supplies on which I need to pay GST under reverse charge mechanism, that will not be part of aggregate turnover. Even taxes also will not be coming into aggregate turnover. Which taxes? CGST, SGST, UT GST, IGST and compensation cess, that is GST group, will not be included in aggregate turnover. Whether old indirect taxes will come in aggregate turnover, yes. For example, I am selling tobacco products, there is central excise duty as well as GST. Now in that case, GST will not be taken in aggregate turnover, but central excise duty will be taken in aggregate turnover, yes. Central excise duty will be taken in aggregate turnover. Then next, here when I say non-tax exempted supplies, that exempted supplies includes non-taxable or nil-rated supplies. Even supply to SEZ, supply to SEZ is zero rated supply, that will also be coming under interstate supplies, you can see. So interstate supplies include supplies to SEZ unit or developer, even though it is zero rated, it is included in the aggregate turnover. Why is it called as zero rated supplies? Because I will be paying GST, and that GST paid I will get as a refund, so the burden will become zero, so it is zero rated. That is one option. Or option 2, I will not be paying any GST, I will export it or supply to SEZ under bond or LUT. Even then I don't have any burden, and I will get the refund of ITC with respect to my inputs and input services. So as the burden of GST is zero, that's why it is called as zero rated supplies. Then this sale of flats and buildings, we saw 3 situations, that is if entire money is received before completion certificate, no doubt it is covered under supply and it will be treated as works contract service and chargeable to GST, not sale of building. Suppose if entire money is received after obtaining completion certificate, then it is excluded from supply, GST not payable, and it is treated as sale of immovable property. Part money received before, part money received after, then it is not excluded from supply, it is covered under supply entirely and it will be chargeable to GST, treated as works contract service. And here completion certificate is a certificate which is given by the urban development authority or any local authority, etc., or municipal authority, whereas first occupation is the date on which that particular building, one flat, is occupied by the person. So first occupation, date on which a flat is occupied by a buyer in the project, it is deemed as a completion, and remaining flats unbooked. So, but that particular first occupied flat will always be chargeable to GST. The remaining flats unbooked only will be excluded from supply. Meaning of distinct person, because we have related party transaction or distinct person transaction treated as supply, 7(1)(c). So related persons already we have seen. Distinct person means one registration of a person to their another registration is called as distinct person. What if they have a establishment in the other state and that establishment in another state is not registered? Even then it will be called as distinct person. Every registration of a person to their another registration is distinct person. Registered establishment of a person in a state and unregistered establishment of that person in another state is also distinct person. When a person is required to obtain registration in more than one state, if a person is doing business in multiple states and in different states they are doing business, multiple business in different state, they need to get separate registration with respect to each state, that is mandatory. When they are doing business in multiple businesses in the same state but in different place of business, separate registration with respect to each place of business is optional, not mandatory. When they are doing multiple businesses, same state, same place of business, cannot obtain separate registration, only single registration they need to obtain because the place is same place. And even though they are required to obtain registration mandatorily, separate registration, then why the hell they will be having unregistered establishment in the other state? Because we have exemption from registration if a particular establishment is exclusively engaged in non-taxable supplies or engaged in exempted supplies or an agriculturist or exclusively covered under RCM. So then in that case, that is a outward supply is covered under RCM, they are exempted from registration. Because of that reason, there is an establishment in another state, so which is exempted from registration, so we will not obtain registration. So the provision says every person is required to obtain registration in every state if they are liable to get registered from where they make taxable supplies. So if they are not making taxable supplies, they are not required to get registered. Even if you have an unregistered establishment, that will be treated as a distinct person. So another establishment in another state, whether registered or not, treated as distinct person. Then we have meaning of recipient. So if consideration is involved in the transaction, the one who is liable to pay the consideration is the recipient. If consideration is not involved in the transaction, the one who is receiving the goods or receiving the services, including as an agent, is treated as the recipient. So once an activity becomes supply, we will classify that into goods or services. So that classification, so we need to check based on 7 subsection 1 here read with schedule 2. First activity we need to see, is it a movable property? Yes. If there is a transfer of title, so whether at present or at a future date, present is sale, future date is hire purchase, it is supply of goods. Suppose if the transfer of title is not there but there is a transfer of right to use goods, then it will be coming under supply of service, that is renting or leasing. Then immovable property will never come under supply of goods because immovable property is excluded from supply, that is transfer of title of immovable property is excluded from supply, so it will not come under goods, but it will come under service if I am not transferring the title but I am transferring the right to use immovable property like renting or leasing of land or renting or leasing of building, etc. Also bringing into existence an immovable property like construction also will be coming under services. Then next, intellectual property rights. If I have a patent, if that patent is permanently transferred to one company, permanent transfer of IPR is treated as supply of goods, but temporary transfer of IPR, I have a copyright which I am giving it to one person and I get a royalty, that is a temporary transfer, it will be treated as supply of services. Then carrying out process on the goods belonging to other person, so other person is giving goods on which I do the process. If the major material is supplied by the recipient on which if I do the process, it is supply of services. If I am only buying the material and I do the process and give, some material may be given by the recipient, still it is treated as supply of goods. For example, I am selling a bag. In that bag, the chain or zip is given by the recipient. When the chain or zip is given by the recipient, but the substantial material I am only supplying, but small material is given by the recipient, still it will be treated as supply of goods only. Suppose if the entire cloth, zip, everything they are giving, I am just doing the stitching and giving, then it will be treated as supply of service. But while doing the stitching, I may use the thread, etc. and all, but still it is supply of service only because the substantial material is given by the recipient. Then supply of goods along with services, there are notified supplies. 3 notified supplies which will always be treated as services even though it involves both goods and services. What are they? Works contract, information technology software, and supply of food. Works contract means a contract that involves both supply of goods and services. Contract involving transfer of property in goods and transfer of property in services. Say for example, one compound wall I am constructing, I will only supply the material required for construction, I will only do the services of construction against a single consideration. It will be treated as works contract service, but importantly it should be in relation to immovable property. If it is in relation to movable property, it will not be treated as works contract service. Then, so these 3 will be always treated as supply of services, works contract, information technology software, and supply of food. Then if there is any other transaction that involves both goods and services, we need to check composite supply or mixed supply. If the principal supply is goods, then entirely it is treated as goods. If it is a composite supply and the principal supply is goods, entirely it is goods. If the principal supply is service, entirely it is service. For example, AC plus installation is a composite supply. The principal supply is AC, which is goods, so entire transaction is treated as goods. Then coaching plus study materials is composite supply, but the principal supply is coaching, so entire activity will be treated as supply of services. If it is a mixed supply, check the highest rate. If the highest rate is goods, entirely it is treated as goods. If the highest rate is service, entirely it is treated as services. So TV is say 28% and optional warranty will be 18%. Highest rate is TV, so entirely it is treated as goods. And whereas video lectures 18% and pen drive 12%, so video lectures is the highest rate, so it will be treated as supply of services. Apart from this, any other activity, doing an act, not doing an act, or tolerating an act will be treated as supply of service. Doing an act, I am doing something. Tolerating an act, so that is breaching. The other person has breached the contract and I am tolerating the breach. Or not doing an act, non-compete fees. So all these are supply of services. Then meaning of job work. Job work basically is carrying out process on the goods belonging to the other person and it is a supply of services. If the other person is registered, then it will be called as job work. If the other person is not registered, it will be supply of some other services. But both cases it will be treated as services. Then composite supply and mixed supply. Composite supply means first we need to check, so 2 or more supplies should be involved and these 2 or more supplies all must be taxable and it should be naturally bundled in ordinary course of business and the principal supply is identifiable, then only it will be called as composite supply. And nowhere in composite supply it is given that there should be single price or separate price like that. However, mixed supply means 2 or more individual supplies, means it can be combination of taxable supplies, exempted supplies, or non-taxable supplies, and there it should be for a single price. and all the composite supply elements, if it is not present, then it will come under mixed supply. But for mixed supply, only one condition, that is it should be for a single price. But in both the cases, there should be 2 or more supplies. So first we need to check whether there are 2 or more supplies in a single transaction. If it is no, section 8 is not applicable. Yes, 2 or more supplies are there. Now check all the 3 conditions. The first condition is that all are taxable, naturally bundled in the ordinary course of business, principal supply identifiable. If all these 3 conditions are satisfied, then it will be composite supply. The price can be single or the price can be separate, and we need to take the rate of principal supply. If any one is no, you check for single price. If it is for a single price, then it is mixed supply, highest rate will be taken. So it is not a composite supply, not even mixed supply, then it will be individual supplies, it will be taxable at the respective rates. So AC and installation, so AC is 18%, sorry 12%, installation is 18%, all are taxable. Naturally bundled means one cannot be supplied without the other. Principal supply AC identifiable, so it is a composite supply. Suppose if there is popcorn and coke both are taxable, but not naturally bundled in the ordinary course of business, and it is for a single price, therefore it will come under mixed supply. Inverter and battery, inverter for 20,000, battery is for 10,000. Now in this case all are taxable, naturally bundled, no, not naturally bundled. So is it for a single price? No, it is not for a single price, therefore it will be individual supplies, inverter taxable separately, battery taxable separately. Then in case of, there are 2 circulars in this regard, in case of servicing of cars, only in case of servicing of cars we don't have to apply the test of composite supply. So whenever the invoice has separately goods and services, so in that case the goods element is parts replaced during the services. See, during the servicing what they will do, they will be replacing the parts, that part replacement is the goods, whereas they do the labor charges for replacement, that will be service element. And if this is given breakup separately, you treat it like individual supplies and chargeable to GST at the respective rates. So parts replaced and labor charges for replacement are treated as individual supplies if the amount is shown separately for each. Then next one, food and beverages. Whenever food and beverages are supplied by the cinema theatre, so in that case the rate applicable to food and beverages will be 5% only, unless the food and beverages is given as a complimentary as a part of the ticket, then on that food and beverages the rate will become 28%, that is the rate applicable to cinema theatre. So food and beverages purchased in a theatre taxable as individual supplies, taxable at the respective rate to the restaurant, that is 5%. And if the same is purchased along with the ticket, then it may attract, when it will attract, when it is naturally bundled in the ordinary course of business. In such case food and beverages at the rate applicable to entry to cinema hall. Then the last area that we have in this, that is summary of various circulars, important circulars, in that the first issue is with respect to interstate movement. So between distinct person there is a conveyance that is carrying goods or people, whether GST payable on that conveyance? No. And there is a conveyance between the distinct person sent for repairs, whether GST payable on that conveyance? No. And there are some tools, spare parts, etc., which are sent between the distinct person for consumption in the distinct person, not for further supply. Will it be treated as supply? No. So these 3 activities not treated as supply. Activity number 1, conveyance sent between the distinct person carrying goods, or conveyance sent between the distinct person for repairs or after repairs, and conveyance sent between the distinct person carrying spare parts. That spare parts also there is no supply, provided that spare parts is not for further supply but for consumption in the distinct person. Even though this particular circular is given in the context of interstate movement, the same principle will be applicable in case of intrastate movement also, provided they have obtained separate registration. Next, when an agent is termed as agent acting on behalf of principal, so an agent will be called as agent acting on behalf of principal if it is a sale transaction, invoice is raised by the agent in his name. If it is a purchase transaction, the invoice is in the name of the agent. Then only between principal and agent it will become supply, and the agent should represent principal in all aspects. Then in case of print activity, so the supply involves printing of books, etc. So therefore in the print activity the goods element is paper and ink and the service element is printing and binding. Now we need to check what constitutes principal supply. In case of books, brochures, flyers, etc. and all, the principal's element involved is, the principal supply is printing, so it will be treated as supply of services. But in case of printing on letterheads, tissues, napkins, etc., the principal supply is only goods, therefore entirely it will be treated as supply of goods. Then next one, whether the activity of bus body building is supply of goods or supply of services. So it is majorly supply of service, because again we need to see the principal supply. In bus body building they will be adding lot of material and they do fabrication and installation. Fabrication and installation is the principal supply, but the materials, pipeline, sheets, etc. used is not principal supply, so it will be treated as supply of services. Then next, whether the retrading of tire is supply of goods or supply of services. Again, the principal supply involved here is the retrading element. Even though rubber is the goods element, but retrading is the service element, so it will be treated as supply of services only. However, when the old tire is purchased and the rethreaded tire is sold, then in that case the sale of rethreaded tire will become supply of goods. Then whether priority sector lending certificates are treated as goods? Yes, priority sector lending certificates are sold by one bank to another bank whenever the another bank has falling short of priority sector lending. So one bank which has achieved the priority sector lending in excess will be transferring the priority sector lending certificates to another bank which has not achieved the priority sector lending. For transfer of this PSLC, they will be collecting some money. So this transaction is treated as supply of goods, and this transaction happens through e-Kuber portal of RBI. Due to that reason, the selling bank don't know the buying bank, etc. So it will always be deemed to be interstate supply. And also priority sector lending certificate between registered persons is notified for RCM, where liability to pay GST is on the recipient. Then whether artwork sent by artist. So artist who is sending the artwork to the art gallery, the day on which he is sending the artwork to the art gallery, it is not a supply, because the art gallery, when they sell to the buyer, then only it will be treated as supply in the hands of the artist who is sending the artwork to the art gallery. Whether tenancy rate or pagadi system is chargeable to GST. So tenancy rate or pagadi system arises in case of transfer of tenancy rate or renouncement of tenancy rate. When a tenant transfers the tenancy rate to another tenant, or when the tenant renounces the tenancy rate to the property owner, the tenancy premium will arise. This particular tenancy premium will always be taxable in the hands of the tenant, whatever may be the nature of the property, etc. But if suppose the nature of the property is registered property, then the share of tenancy premium received by the property owner is exempted. So tenant will always pay GST. However, the share of tenancy premium collected by the owner of property is taxable if the rent of that property is taxable. If the rent of the property is exempted, then the share of tenancy premium received is also exempted by the property owner. Then GST on director remuneration. So whether director remuneration is subject to GST, it depends upon whether the director remuneration is chargeable to TDS under 192 or 194. If the director remuneration is deductible under 192, then whatever remuneration received by the director is covered under salary, so this will be excluded from supply. If the director remuneration is chargeable to TDS under 194J, then in that case it will be covered under supply, and liability to pay GST is on the company. And also one more test is there, we need to check contract of service or contract for service. Suppose if it is contract of service, which means there exists an employer-employee relationship between director and the company, so that is excluded from supply. If it is contract for service, then it will be covered under supply, and wherever it is covered under supply, liability to pay GST is on the company or body corporate, but only when the director is providing service in the capacity of a director. Whether insured getting no claim bonus from insurance company is supply of services. So insured will get no claim bonus from the insurance company for the purpose of not lodging any claim in the last year. So this no claim bonus cannot be equated to consideration for not lodging the claim, because in expectation of this consideration he is not lodging the claim. Got it? So not in expectation of this, he did not lodge the claim because there is no accident for which this money they are receiving, not like directly they will not receive this money, it will be like a reduction from the premium that is payable, so therefore it will not be treated as consideration. Then whether interest received by debt creditor agent is chargeable to GST. Basically interest, we have 2 points: interest on loans, advances, deposits, which is exempted. Interest on account of delay in receipt of consideration will be chargeable to GST on inclusive basis, and it will be included in the value of supply and chargeable accordingly. But here, whenever there is a debt creditor agent who is collecting the interest, we need to check whether the invoice is raised by the debt creditor agent in his name. If the invoice is raised by debt creditor agent in his name, then the interest collected by him is on account of delay in receipt of consideration, so it should be included in the value and chargeable to GST. If invoice is not raised by debt creditor agent in his name, but the principal has raised the invoice in the name of the principal, debt creditor agent is mere providing the finance, so the interest will be coming under interest on loans, advances, deposits, and it will be exempted. Then whether insurance company is liable to pay GST on the salvage value or wreck value while assessing the damage to a motor vehicle. It so happens that whenever we take a motor vehicle insurance and that vehicle met with an accident, when the vehicle met with an accident, so what insurance company will do, they will send a surveyor. That surveyor will evaluate what is the claim amount. So when they ascertain the claim amount, so whether they have considered this salvage or not considered the salvage, so we need to check. Suppose while assessing the claim amount, they came to know that the salvage is the property of the insured. property of the insured, not the insurance company. So which means insurance company will pay money only for the loss excluding the salvage. Now the salvage is owned by the insured. Now that insured subsequently when he sells that salvage to any person, so it is supply or not a supply depending upon that insured. As insured is the property owner, insured is the salvage owner, depending upon that. But for the insurance company, always this will not be treated as supply when the insured is selling the salvage. Got it? This may be sold by the insurance company also, but insurance company will not be treating it as supply because that salvage belongs to the insured. Now it will become supply in the hands of the insured. Suppose if it is activity for consideration in the course or furtherance of business, it will be supply. Otherwise, if he is a personal, if the car is his personal property, then it will not be treated as supply. That is this point. So salvage remains with the insured. They are not a supply. For the insurance company, it is not a supply and GST not payable, but it may become supply in the hands of the insured. Then what if salvage become property of the insurance company? So it so happens that we made a claim amount. So claim amount includes the salvage also. So we have paid 10 lakhs including the salvage, means now the salvage is the property of the insurance company. When they subsequently sell it, it will be treated as supply in their hands and they need to pay GST. So sale of such salvage treated as supply and GST payable in this case. So these are the various circulars and this is the latest amendment that we have. With this we completed supply chapter. Okay.